Hello and welcome to another video on how to secure yourself financially. In the last video, I was looking at the most common operating assets and liabilities, right? So we have accounts receivable, inventory, property, plant, and equipment, prepay expense such as premium insurance like health for medical coverage, a home or a vehicle to protect that in the case of an accident or fire, thief, or any other uncertain event. Liabilities such as lawsuits, life in the event of the policy holder's death, disability, and long-term care such as home health care or nurse home care. Then I also look at other prepaid expense such as rent, office supplies, contract maintenance, software license, and keep looking at other operating assets such as intangible assets like patents that provide exclusive right to the inventors to distribute, manufacture, and sell that invention over a period of time, and the copyright, like the in this case it protects or it provides exclusive right to creator of original works, again for a period of time to distribute and sell that, such as Netflix, Spotify, Twitter. We also have trademarks, which are image, designs, audio that uniquely identify this company from the rest, such as Michael Burry and his famous quote, "Let's get ready to rumble." A couple examples of patents you have is the maglev, issued in 1979 according to Popular Mechanics, which is this electromagnetic device for ground for suspension and stabilization for ground vehicles. GPS, this navigation system using satellites with passive ranging techniques, issued in 1974. The electronic device, as the name suggests, as the patent name suggests, is the iPhone in 2007, and the CRISP, or this gene editor, issued in 2014. And when it comes now to keep looking at intangible assets, you have is goodwill, the brand reputations, recognitions, and customer lists, as well as the customer relationship and the trade secrets, this confidential data that company use to gain competitive advantage, such as formula, process, or customer list. Keep looking at the most common operating assets you have is investment in affiliate, which there are companies that invest in another company with the whole purpose of gain influence but not full control to earn a return on the investment or to gain a competitive advantage. For example, joint ventures like Crocs and Post Malone are a good example when this is a partnership between two or more companies. In the example before is Crocs and Post Malone. Okay, they make these joint ventures to undertake a specific business activity or projects where each part receives a share of the joint investment or in the joint venture. You also have this equity investment like Berkshire Hathaway, which is led by Warren Buffett. And this global holding investment firms, and the name holdings is, well, a parent company that the way of how it interact with other company is through owning stocks, right? So they don't engage in direct business operation. So Berkshire Hathaway invests in a variety of industry and sectors such as energy, real estate, and retail. SoftBank is another Japan, but it's a conglomerate holding company. Japanese, it's a Japanese conglomerate company or holding that invests in a variety of technology company, mainly Uber, WeWork, Airbnb. Alphabet, which is a parent company of Google, that invests again in a variety of technology companies such as Calico, much like the SoftBank, what it does. Um, and also it used their venture capital arm, the GV, to invest in other companies. You also have is the Texas Pacific Group, which is a private equity investment. Very important to know here. A private equity investment that invests in a variety of sectors like health, retail, real estate. The most notable investment is Airbnb, as well as something called Blackstone, where this is a investment firms that their most notable investment is BGUS, which is a competitor of Khan Academy, this online platform, educational online platform, uh, issue in or headquarters on Bangalore, India, BGUS, unlike Khan Academy, which is headquartered on San Francisco. So then I also look another type of investment in affiliates like limited partnership, where now a company or a investors purchase stocks, or in this case invest in a limited company where that issue is shares of ownership as well as as well as control over the partnership assets and operations. And this is something very delicate, but it's important to know. And then we have is the associate, right, which is a company or investor that owns a vast majority of the stock in a company, usually between 20 to 50%. So then I also look at other operating assets like cash and cash equivalents, such as money market funds and things like that. And now looking at operating liabilities, the most common operating liabilities. What here we have is accounts payable, which is money that a company owns to suppliers and vendors. It usually is a short-term debt, such as 30 to 60 days. And example is, well, raw materials, office supplies, service. In contrast, the accrue expense, which are expense that a company incur of good and service that has been delivered but not yet paid for, And here we have is wage and salary, rent, utility bills, taxes. I also look at the recurrent deferred revenue. And this deferred revenue is money that a company or money that a company has collected, money that a company has collected for future obligations of providing good and service, such as subscription service, maintenance contract, gift cards. So that is good. Okay, that is good because now I know what are the most common. Okay, now I know what is the most common um, operating liabilities. Okay, I look at the accounts payable, accrue expense, deferred revenue, income taxes payable. So income taxes payable is money that the company owns to the government. Yeah, it's money, the amount of income tax that a company owns to the government. Okay, so let me keep reading about this. So, okay, so income tax payable for the amount of income tax that a company owns to the government for a specific period. It represents a liability on the company's balance sheets. Okay, it represents a liability of the company balance sheet as the company has obligation to pay its income tax to the government. Income tax payable are usually short-term liabilities that are expected to be paid within a specific period, such as the end of a fiscal year. The amount owed is calculated based on the company's taxable income and the applicable tax rate. So, in other words, income tax payable is the amount of income tax a company owns to the government for a specific time. So, income tax payables are usually short-term liabilities, meaning uh, a year or less in the context of finance. So the amount owed is calculated based on the company's taxable income and the applicable tax rate. So example of income taxes payable may include corporate income tax, withholding taxes, sale tax. So the TLDR of income taxes payable, similar to accounts payable, but this is income tax payable, is the amount of money the amount of income tax a company owns to the government. Whether it's legal or not, it's right or not, it doesn't matter. Now you have, as a company, have to pay tax based on your income. So example of this, so income tax payable are usually short-term liabilities that are expected to be paid within a specific period. Okay, such as the end of a fiscal year. So this is a short-term liability that is expected to be paid within a specific period, such as the end of the fiscal year. So income tax payable. The amount owed is calculated based on the company taxable income and the applicable tax rate. Okay, so the company taxable income in Spanish, this is el ingreso de la compañía que es eh, impuestos de la compañía, impuestos de los ingresos de la compañía, okay, and the applicable tax rates. Example of income tax payable may include corporate income tax, like this. Okay, this is now an example of income tax. Corporate income tax. If a company generates taxable income, it is required to pay corporate income tax to the government. So when you talk about taxable income, what does it mean? Meaning taxable income that is subject to taxation by the government. It is calculated by subtracting allowable deductions and exceptions from gross income earned during a given year. For individual, taxable income typically include wage, salaries, tips, interest, dividends, capital gains, and any other income earned during the year. Deductions or exemptions may include expense related to home ownership, education, and healthcare. Interesting. Deduction and exemption may include expenses related to home ownership, education, healthcare, and retirement savings. For business, taxable income is generally calculated by subtracting allowable deduction, such as business expense and depreciation, from the gross revenue earned during the year. The resulting figure is the company taxable income, which is subject to corporate income tax. The specific rules and regulations regarding taxable income can vary depending on the jurisdiction and type of tax. In general, however, taxable income is an important concept for individual and business to understand in order to properly manage their tax obligation and avoid penalty for non-compliance. So, for this case, okay, so since I'm looking at the income tax payable, okay, in Spanish this is impuestos de ingresos a pagar, income tax payable. So this is the amount of income tax that a company owes to the government, usually short term, that it is expected to be paid within a specific period, such as the end of the fiscal year. And the example of this are corporate income tax, withholding taxes, and sales taxes. Okay, so corporate, withholding, and sales taxes. But the question is like, okay, so where is taxable income? You know? Because here it mentions that yes, so income taxes payables refers to the amount of income tax. Okay? So income taxes payable refers to the amount of income tax like this. So income taxes refers to the amount of income tax that a company owns to the government for a specific period. But when you talk about here, that's right. So it represents the liability on the company balance sheet as the company has the obligation to pay income tax to the government. Income tax payable are usually short-term liability that is expected to be paid within the specific period, such as the end of the fiscal year, and the amount owed is calculated based on the company taxable income. Okay, so first I'm looking at the definition and then the know-how. How do you calculate it? So the plain definition of income taxes payable is the amount of money, the amount of income taxes a company owns to the government, usually is short term, and the way it is calculated is based on the company taxable income and the applicable tax rate. So this is the know-how you calculate it, okay, based on the company taxable income as well as the applicable tax rates. And when I ask to ChatGPT here about that, it's like, okay, this is the company taxable income, okay? What does it mean, taxable income? And well, I look at this is a portion of an individual or business income that is subject to taxation by the government. But again, this taxable income is a portion that an individual or business income is subject to taxation. And it is calculated by subtracting allowance. Exactly. So first is defining the definition and then the know-how. It is calculated by subtracting allowable deductions and exemptions from gross income earned during the given tax year. So this is something that when you look at the income statement after you set up the after you set up the gross revenue, and then once you go down, you can think of that as an income statement, or the way you can look at that is like a set of stairs, where each step you make a deduction of that, and at the bottom line or the bottom of the stair, it indicates if a company made or not profit. Okay, so you all at the beginning you have the gross revenue, okay, and once you go down to that, there are certain deductions that happens. So deductions like cost deductions like yeah, deductions like, do you say that you have deductions like allowance or merchandise returns, and then once you do that, you reach to the net profit, which is deducting all of this allowance and merchandise return from the gross profit, and then you reach to the net revenue. Okay, as you go down the net revenue, then you most of the time you uh, deduct the cost of sale. Okay, meaning is how much it costs to uh, how much it costs you to produce the good and service. The cost of sales. Right after that, then you make the deduction of the op- uh, operating activities, or in this case, is you make deductions based on the company operation expense, okay, such as administrative salaries, marketing, and this is not the same as the cost of sale, because this kind of expense, operating expense, cannot be linked directly to the production of good and service, to the cost of producing the good or service. You also have here the depreciation, and ultimately you reach to the income taxes. Okay, where are deduction that you can do based on how much, after making all of this deduction, how much money you owns to the government, right? And after you deduct that amount in the income statement, then you reach to the bottom line, which show you, well, if a company made or not profit. Okay, cool. So So that when you talk about taxable income, okay, refers to the portion, the part of the individual's or company income that are subject to taxation that you owns to the government. Okay, so for individuals, and this is very very important to know, for individuals and for business. So for individuals, taxable income typically include wage, salaries, tips, interest. In that they include tips, interest, dividends, capital gains, and any other income earned during the year. So let's go to look at taxable income from Investopedia. Investopedia here. Taxable income. So taxable income, what it is, what counts, and how to calculate. So taxable income is the portion of your gross income on which you are required to pay income taxes. After all, it's money that you own to the government uh, based on your income. All right. So what is a taxable income? Taxable income is the portion of your gross income used to calculate how much tax you get. Taxable income is the portion of your gross income used to calculate how much tax you owe in a given tax year. It can be described broadly as a just gross income AGI minus allowable itemized or standard deduction. Taxable income includes wage, salaries, bonus, and tips, as well as investment incomes and various type of unearned income. But in other words, the taxable income is the portion that you owns to the government. Okay, is a portion that an individual or business income owns to the government. Period. Okay. So understanding taxable income. Taxable income consists on both earned or unearned income. Unearned income that is considered taxable include canceled debt, government benefits such as unemployment benefit and disability payment, strike benefits, and lottery payments. Taxable income also includes earnings generated from appreciated asset that has been sold during the year and from dividends and interest income. When it comes to deductions, the IRS offers individual tax filers the option to claim the standard deduction or a list of itemized deductions. Itemized deductions include interest paid on mortgage, medical expense exceeding a specific threshold, and a range of other expenses. When businesses file their taxes, they do not report the revenue directly as a taxable income. Rather, they subtract their business expense from the revenue to calculate their business income. Then they subtract deduction to calculate their taxable income. Important tax bracket and margin tax rate are based on the taxable income. Taxable income, not gross income. Source of taxable income. Employee compensation. Source of taxable income. Employee compensation. Income from business and investment. Income from partnerships. Income from S Corp. Any income tax or on earnings. This is passed through the shareholders based on their ownership stake in the S Corp. If you're a shareholder, earning losses and deductions are reported on your personal income tax return. Other sources: bartering, digital currency, and royalties. Bartering involves an exchange of goods and service rather than cash. So if you fix the electrical system in someone's home and they pay you with a similar service, Rather than cash, the value of the service is considered taxable income. Bartering. Digital currencies. Activities related to this alternative currency are considered taxable income. Exactly. So digital currency, they are considered taxable income and royalties. You must also declare royalty as taxable income that you earn or own intellectual property, copyrights, patent, trademarks, and oil, gas, and mineral property. Royalties. How to calculate taxable income? Yeah. I just want to know is the basis. Just want to know is the basis. But after all, so a taxable income, all right? So after all, a taxable income is the portion that an individual or business incomes owns to the government. So it's not the gross revenue, is once you have deduct expense of costs associated or the cost of sales as well as operating assets. Once you deduct the cost of sales and the expense or the operation expense, okay, among others expense, but the two big parts is the cost of sales and operating expense. Okay, the cost of sale is indicates how much money a company owns, how much a company, how much it costs for a company to produce the good and service in a given year. Uh, and the operating expense is, well, expense associated to produce this good or service that cannot be linked directly, but it impacts the income statement. Okay, okay. So when you talk about taxable incomes, is after you make all of this deduction, this is the amount of money, whether it's an individual or a business, you own to the government. Okay, and for individual, taxable income typically include wage, salaries, tips, interest, dividends, capital gains, and any other income earned during the year. Deductions and exceptions may include expense related to home ownership, education, healthcare, and retirement saving. So I'm going to ponder in this. I'm going to ponder in this because I want to look at taxable income for individuals. Taxable income for individuals. No, just give me a list according to you, right? List of taxable income for individuals. Wage and salaries, tips and bonus, income from self-employment, including freelance work and business income, interest income from saving account, bonds and other investment, dividend income from stocks and mutual funds, capital gain from the sale of assets such as stocks, real estate, and personal property, rental income from property owned by the individual, alimony and spousal support payment received. Funny, alimony is subject to taxes. Alimony is subject to taxes, also called alignment, maintaining, spousal support, and spousal maintainer. Yeah, yeah. Wage and salary, tips and bonus, income from self-employment, including freelance work and business income, interest income from saving accounts, bonds and other investment, dividend income from stock and mutual funds, capital gain from sale or of assets such as stocks, exactly, capital gain from sale of assets such as stocks, real estate and property and personal property, rental income from property owned by the individual, alimony, unemployment compensation, social security benefits, gambling winnings including from casinos, lotteries and horse races, award prize and settlement, foreign air income in certain circumstances, forgiveness of debt. What? Retirement account distributions such as from traditional IRS, uh, but they are not securities. So IRS and 401, they are not securities. They're just little boxes where you deposit money from that. Exactly, they're accounts. Individual retirement accounts. A tax advantage. Retirement saving account. Yeah, it's a saving account. It's a saving account. But it's a saving account. It is important to know that this list is not exhaustive and that the specific rules and regulations regarding taxable income can vary depending on the jurisdiction and type of tax. Individuals should consult with a tax professional or prevent the relevant tax regulations. But this is a list from taxable income from individuals. Oh, this is something very important to know, man. From U.S. citizens or residents. List of taxable income for business. Holy moly. Revenue from sales of goods or service, income from rental or leasing, interest income from loans, investment in banks, from loan, investment and bank accounts, dividend income from stocks and mutual funds, capital dividend income from stock and mutual funds, capital gains from sale of assets such as stocks, real estate, and personal property, royalty from the use of intellectual property such as patent or trademarks, insurance and other recovery, foreign income in certain circumstances, income from bartending or exchange goods and service, and employee compensation including salary, wage, bonus, and benefits, self-employment income earned by sole proprietor and partners, partnership incomes earned by partners, income from S corporations passed through to shareholders, rental income from property owned by the business. So, in other words, basically any income you receive, you have to tax them. Basically any income you receive, that's the name, that's why they call this taxable income. Taxable income. Okay, so with that, that'll be all for this video. Take care. Bye bye.